It's rare 1950. At the Boundary, you can shoot some fool down there. You can act a fool down there. You can play it cool down there. At the Boundaries, you can drink some beer down there. Are you laughing cheer down there? That's another year down there. Jimmy got caught smoking a joint at the bar, sitting in his car. They took him to jail. The tip jar paid his bail. In 19, Big Jack Madison, town built the house around, signed his name on the wall. In the ladies' bathroom stall. Yeah. At the bathroom, I turned 21 down there. Had too much fun down there. Stumbled out with the sun down there. And it's shorter than scary. Yeah, here's what the hell could it hurt? Second step beyond. But the band, there in her hand, it sings reverse. Then she raises the toast. Here's the ring. At the Boundary, you're one of our own down there. You never drank alone down there. Good God, I feel it home down there. You're one of our own down there. You never drank alone down there. Good God, I feel it there.
Good morning, everybody. We'll get started here in about 2 minutes. Market was kind of unusually quiet around the reports. Thought we'd get a bigger reaction, but it gives us time to maneuver. All right, take a moment, get familiar with what we're doing. We do have some economic reports coming out at 9:45. A lot of stuff going on in the media. About 1 minute away from the start time. All right, let's get this ball rolling. Good morning, everybody. I don't, I'm not able to see my the live stream YouTube chat, so the team will be posting the chat so I can see it. But please ask questions, look around. If it's your first time visiting us, just you know, watch what we do. Okay, we have a pretty good time. We do a lot of pre-market prep. And we use news, economic reports, and I have some pre-market tips and some opinions and things. And we also have some major levels that we watch for bigger time frame turning points. We want to watch when price gets to those levels. Right out the gate, we are seeing the US dollar still trading flat. And we did see a nice uptick from the reports on the 10 and the 2-year yield. Okay. Now we monitor the dollar 10 and the 2-year yield to see if they're correlated. When they're not correlated, we tend to take a little bit slower approach to making trades. Okay. We kind of wait for them to become correlated for better market conditions. What you'll find in um, there um, in our live trading room and this live stream here we do each Friday for everybody to come and check out and see what we do. We do give some education along with what we're looking for trades. Okay. Newer traders and even seasoned traders often have a lot of things that they look at to understand the market conditions to weigh out if it is safe for them to participate. And good morning to everybody in the live stream. We're glad to have you here. Okay. On the other hand, let's look at I'm going to kind of dive in here so we can make some trades. We've got to understand the conditions. The trend is really quiet, and also and this is pre-market trend, which is the ARMS index. And we can see that the volatility index is also very quiet in the pre-market. Okay. Now that is kind of unusual for what we're seeing in the marketplace right now. As we're starting off with the equity indexes, NASDAQ is an inside day. Okay, well, I'm sorry, it's back inside the prior session's range. So we're kind of looking for that gap fill area coming up. And let's see if we have, we got a nice fair value gap area that we're going to look for price to possibly turn around that area. Now, the nice thing about the futures is that the stocks move first, exchange traded fund moves second, and then we have the futures adjust. Okay. So futures are not leading, they're actually lagging because of they are a derivative. Okay. So let's come up with some levels that we're looking at. Okay. Looks like the Russell has just come back up to that fair value gap. And I'll look for price to turn off of that, potentially come back down. And we'll look for that 2630 as a target area. S&P has also just hit the fair value gap. And I think I'm going to come in on that one. S&P, NASDAQ. NASDAQ's still a little slow. And the Dow. Okay. Now, when I'm doing a live stream and demonstrating trading, okay, much of the time I'm using real market conditions, okay, real-time price charts. But during the presentations, I will be trading on a simulator, okay? A lot of that is around compliance and regulations, just so that I just want to give kind of full disclosure on that, okay? So we use many techniques. If the market is already making lower highs, lower lows, or trending, we use a fair market gap trade entry, and that's that 3 candle pattern. Okay. So I'm going to keep the size small. I'm going to start off with 2 micros on the Dow, and we're going to come in with protective stop loss at the high of candle 1. Okay. Now, at this point, you go, oh my gosh, that's a huge stop loss. Well, it is, but size your position accordingly. Okay. So it's not a big dollar risk. Okay. We've got a long way to go to find demand. Okay. We're about ready to break some major support levels and 50 moving average on, well, we're already below the 50 moving average on the S&P and the NASDAQ. And we're looking at that Dow right now, possibly getting back down below that 50 moving average. Okay. So always in your trade plan, have a specific dollar amount risk that you are going to take on a trade. So 49.51. Let's come back up here and place our protective stop loss. Okay. Now, on the higher time frame, I'm looking for 49.178. I'm looking for a 48.970. That's our prep screen zone. That's the path I'm looking for, and the number of points we're looking for before we're looking for price to change direction. So there's going to be opportunity for us to add on to this position in the direction of the higher time frame trend. Okay, we just had to find a way to get into it, okay, which we did, and we placed a protective stop loss. Okay, so we'll let that one run, and for always go back up and look. You said, okay, I'm placing my stop loss there. You need to visually connect with your dollar amount that you could potentially lose. If that dollar amount is like, oh, ouch, that's not going to work, then downsize your position or cancel the trade while you have it's either a small loss or a small gain. You're just not prepared for that loss. Therefore, don't take the trade yet. Okay. And that's okay, because there are things outside the price chart or on the price chart that are causing you to feel that way. And take time to listen to that. Okay. All right, NASDAQ, we still got a little bit of time. And on S&P, we're right there. So let's bring that one up. And price just touched it. Got a fair value gap trade entry, making lower highs, lower lows. And let me just change the color of the lines there. Now, I'm not overly bearish on the market. I'm actually feeling kind of bullish. But, okay. I've noticed that with social media lighting up, many distractions. Okay. And this is a key point when we check the news, economic events, you know. Hey, last night, President Trump come out and said, hey, we're going to see the aliens come out now. And that's just a huge distraction. Epstein files, all that stuff is just distractions about things that are actually taking place behind the scenes. Okay. So everybody's looking one way, and we tend to look at the price charts and look the other way. Okay. We just want to look and be prepared. Okay. But the distractions often cause people to trade a little differently, more emotionally. We had GDP numbers, which we're still questioning, and also the PCE, which is another delayed number. Reports came out. Okay. And it's really important to understand the delayed numbers, because the delayed numbers are referring to, if it's not delayed, it's referring to last month or last quarter or last week information. Okay. If it is delayed, it's a couple of months back. Okay. Now the volume still remains light. Let's just go and take a look at that on the S. I want to get into that one there. Probably just stay with the Dow right now, but the S&P did get that fair value gap stop loss, 876. I'm a little late to get into that, so I'm going to keep my position size small. Just a couple of micros.
Order fill.
Oh, that wasn't what I wanted to
Order
do.
fill.
Okay, selling short.
Order fill.
Okay, and stop loss up there about 68.76. Now using two micros, $180 max stress. Stop loss, you're seeing where it is on the price chart. We're utilizing a fair value gap trade entry. Our targeted range is 68.03. Okay. Now, you just saw there was $180 max risk on that trade. Okay. Now, if that is outside of your trading plan, you can always downsize it. Okay. And just because it's turning green, don't say, no, I'm going to hold it. I'm ready for it. No. When you looked at that dollar amount and you said, oh, 180 bucks, am I ready for that risk? Can I recover from it? And if you kind of get like, I don't know, I'm not sure, that's okay. Okay. Just close one out. Okay.
Order fill.
Now go back up and look at the max risk and say, oh, okay, I got $90 max risk on that trade. I can handle that. Okay. So change your size. Make sure you change your size. Okay. And then let it go. Okay. There's a large potential profit here. So we don't have to take a large size on the position. Okay. We want to get into some trades where we can comfortably ride the market lower. Now, the reason I came back to the S&P was to look at the volume on the Dow 30 stocks. Wow. NVIDIA only has almost 2 million shares traded. That's a good odds enhancer right there. That's very light. American Express, 1,500 shares traded. Honeywell, 1,500. Okay, this is very light volume. Now, the light volume on the Dow 30 stocks acts as an odds enhancer to say, hey, if it's very light volume around the market open, we're going to expect a lot more whipsaw and volatility. Okay. With the potential whipsaw and volatility, keep your position size small. Okay. Because what's going to happen here is prices may drop or rally to find where the large stack of unfilled orders are at. Okay. Remember, when the market opens, the algorithms come online. Well, they're online now, processing orders, and the algorithm doesn't know anything but where the large stacks of orders are at. Okay. And price will go up to find sellers, price will go down to find buyers. Okay. In the last about 10 sessions, we have noticed that there has been much more whipsaw volatility, and the volume accounts for this. Now, when we look at the Dow futures negative, or sorry, S&P futures down 21, we want to equate a cash value. So the Dow 30 stocks is the only price weighted index. Okay. Dow 30 being a price weighted index. The S&P, NASDAQ, and Russell are market capitalization weighted indexes. So we can take the Dow 30 and we can calculate, say, okay, for every Dow stock that is negative over 94 cents, we'll give it a value of 2 points. Right now we have 8 Dow stocks negative over 94 cents and nothing positive. Take that 8, multiply it by 2, and we get a value of cash. Okay, why is cash important? Futures follow cash. The Globex system adjusts price up or down after the cash moves. Okay, so stocks move first, exchange traded funds second, and then the futures. Okay, so when we look at cash, we see cash is valued at 16 negative. Okay, futures are trading at 22 negative. Futures are now oversold relative to cash. And this is important at the start of the session to see if futures are oversold relative to cash or overbought, because futures will drop by themselves. And then when the cash market opens, they retreat back to the cash value. Okay. So now we know that this short trade that we're in, okay, is a little bit on, its prices are a little bit off. Okay. Now, and the rubber band is being stretched down, is what I'm really trying to get to. Okay. Now, if futures were still overbought and cash value was much lower, okay, then we would start looking for the futures to match up with the cash around the open. Okay. So we're in this trade now. We have explored that we have 1 micro and we have $90 risk that fits within our trading plan. Our potential profit target at this point is around about that 68.13 to 68.03. Okay. We are also in the Dow. Let's check out the Dow. We got into that a little bit earlier. Okay. And we kept our position size small. We went up and looked at our risk on the trade, and it's still right around $90, but with 2 micros. Okay. Now you might say, well, you know what? I don't want to trade anything for $90 or whatever. That's okay. Your trading plan can be modified to what feels good for you. Okay. NASDAQ did not quite reach our entry. Okay. And is potentially got about 3 minutes left, 3.5, 4 minutes left before it creates another fair value gap for potential trade entry. Okay. Now, when the market is trending or breaking out of an accumulation area, fair value gaps, trending type entries in trade management are much more applicable. Okay. They do have a little more risk. That's why we size our position differently when the market is trending versus when the market is reversing. Okay. A lot of things that we look at there. Okay. So Dow is underway. Let's come back over to this workspace here where we have them all. So for the Dow, we're looking for that 49,000 level. And if we're kind of wondering, well, is it going to get there? Should I get out? Refer back to the Dow 30 stocks. Is volume coming in heavy for the buy side or the sell side? There is no volume today. So if the volume is still remaining light and we're getting closer to the New York Open, chances are prices are going to drop to find where the buyers are at. Okay. And we have a couple of levels here on the S&P. The next one down about, not that 67.76 is where we have a Fibonacci retracement. We have to understand that the market conditions are a little more bearish, price being below the 50-day moving average. Okay. Now, at any time you can take a profit. Okay. Don't let yourself get into, I gotta wait, I gotta let my stop work. Okay. When it feels good, take the money, show yourself you had a successful trade entry and trade management. Okay. And you took a profit. You got to change that behavior. The behavior has to be around taking profits, okay? Not waiting to see if you get stopped out, okay? So, all right, let's just let things unfold there. Crude oil. Today is, oh boy, that was a good trade. Today is the last trade date. Okay, it's the 20th. Last trade date on commodities, you see often that price goes lower as they close out the March contract and everybody, all the big professionals roll into the next contract, the April. Okay. Now, the public rolled out 3 days before the last trade date, but the professionals kind of wait till the very last minute. Okay. What I expect is price to move lower on crude oil. Okay. Natural gas, last trade date is a little bit later next week, along with rollover. Uh, if crude oil, and you have to remember that there's a lot of talks going on with Iran, and there's a lot of smoke and mirrors around that. Okay. If something comes out that's good, a deal has been reached with oil and natural gas or something like that with Iran, which is a big producer, then there's going to be a lot more supply. So if there's a lot more supply, prices may drop. And we noticed that this area down here on the high time frame has been a very strong consolidation. We refer to this as a dead space. Okay. That means once price enters that range, it can drop very quickly. Okay. Understanding where most of the orders have been filled is very important. Okay. Because it adds to the potential profit. Okay. All right. Let's come back. S&P. Are we still working good? All right. It's underway. Each time you build or price creates a new fair value gap, let's talk about trade management. A new fair value gap has been created, okay? If you don't want to take the profit, then you need to lock in or reduce your risk. So we're going to take price. We're going to go down to that top of the first candle of the fair value gap trade entry, which is roughly about 68, 62. And we're going to take our risk and we're going to drop it 68, 62. Okay. Now we've adjusted our risk to $17.50. Okay. Now, with a brand new fair value gap, it gives us another place where you could potentially add on. If you think the trend is going to continue, you're looking at volume, you're looking at other things on the price chart. Okay. And you're convinced that price is going to keep making lower highs and lower lows going down. Okay. This is a place where you can add on a single contract. Okay. And your risk would basically go back to about $90. Okay. So I'm not going to do that right now because we've got a lot moving parts. Let's see. Dow. Dow did create a new fair value gap. See, your trade entries should be very, very clear on how you're going to enter a trade. And we use two types of trade entries. One is a fair value gap trade entry, and the other is a leg base. Okay. When markets are trending, often the fair value gap will give you a place to splice in and manage risk. Okay. So adjusting our stop loss, 49,385. There we are. Okay. So now we've reduced our risk to $24 on that. Keeping a fair value gap inside, because a lot of traders like that fair value gap. And, it's not a bad little strategy, okay, to splice into moves. Okay. But this is where they may be thinking of adding on or continuing to short. But manage your risk by changing your stop loss, or just take the profit, do the happy dance and wait for the next trade setup. We are 7 minutes away from the market open. Okay, the VIX is now at 0.85. The fear is starting to come into the market. Okay, and we still have to wait for the, I don't have pre-market trend on this one. But the tick Q and the tick will be something to watch at the market open to see if we have a sell program or a buy program around session open. We also, looks like it's all out there. We have the market on open order imbalance. We can see that the buy imbalance is bigger, okay, than the sell. These are intended orders for the market open order imbalance. Now, if there's a huge buy imbalance, they're posting their orders where they want to buy, and generally they want to buy in a demand zone, okay? So this does not mean that markets will go up. It just means that they have a lot of orders out there, more on the buy side than the sell side. The top buy side, Procter & Gamble, JP Morgan, General Electric, Merck, Berkshire Hathaway. Top sell, Bank of America, Newmont Mining, UNP, JNU ACN. And we can see that Microsoft has more sell side, Google has more buy side, and so on and so forth. Okay. That information doesn't make a trade. Okay. And don't take it as it does. It just tells you what big traders are doing to process orders. Okay. Now, when the big players start to step in, they love to buy low and sell high. So, and that's basically what they're programmed to do. So the buy orders are potentially a little bit lower. Okay. We're exposing those levels with the Russell down about 2630, NASDAQ down about 24597, and Dow about the 49,000 area. Okay. The picture on the price chart where we have unfilled orders. Okay.
Order filled.
All right. S&P. So now if you didn't get in at the first opportunity, and looks like my data is starting to stick a little bit, so I'm going to turn off the video just to free up some resources. Okay, as we get started. Okay, so this was our first entry, and we created a new fair value gap. And also the thing I wanted to point out is volume is lightest around the pre-market reports. Let's see. The last 10 sessions have shown strong whipsaw price action and fast market conditions as the New York session opens. So you have 4 minutes to decide if you want to take a profit or if you want to sit in your trade for the market open. The conditions have been whipsaw, okay? And that sometimes that leads to some big price movement. It's kind of like you're taking a risk. I'm going to leave mine on because my skin in the game is $17.50. I have that much risk. I could get stopped out still, and I have much greater reward. Okay, so it's kind of like you're sitting at the table and going, okay, I know that the last 10 sessions have been very whipsaw on a time-based chart. Do I want to just pocket the money or do I want to sit through that potential whipsaw? Now, you could be right in getting the whipsaw to the downside, which is the trade we're in, or price could shoot straight up. Remember, look at this volume. It's extremely light. Honeywell, 1,500 shares traded, and we're 3 minutes away from the market open. Caterpillar, one of the largest market cap weighted stocks on the Dow, 7,000 shares traded, and it's down $3.50. Okay. Prices are going to shoot up to find sellers or shoot down to find buyers. Okay. And the whipsaw is a big potential, especially with very light volume. Even NVIDIA's only got 2.2 million shares traded. Okay. So you're taking information outside the price chart, not just looking at the red and green candles here. This information implies that there's going to be some whipsaw. Okay. Now, your risk, if you've adjusted your stop loss, okay, is less. Okay. And you're betting that price is going to drop to find the buyers. Now, the whipsaw price action doesn't mean wait and hold. It means if price does drop, you want to hit the buy or you want to hit the close button so you take your profits. Remember, it's whipsaw, it's choppy. Okay. And then we'll wait for a new setup to present itself. Okay. Since I've reduced the risk, I can still have about 25, 24 bucks risk on the 24 on the Dow. And I'm going to risk my profits and the dollar amount for the potential gain. Now, you hear me talking about a lot of risk management, okay? This is where traders get most confused is because they don't have good trade entry management and they don't have good risk management and how they adjust for they play the beat up game. They're just like, oh man, I shoulda, woulda, coulda, you feel it, but you often don't act on it. Okay. So talking about that risk management is very important and also acknowledging the dollar amount. Okay. You don't want to be surprised by what you are risking. Okay. Looks like the Russell just blew right through that. See, that's the whipsaw we were talking about. Taking out a couple of those. S&P just shot straight down. Look at they're all going different directions. What do we do with that? Ooh, here comes Dow. Let's get back over to the Dow. And NASDAQ. Beautiful NASDAQ. But this is whipsaw.
Order filled.
And my data's running just a little bit slow. But don't go off of my charts, okay? My data is running a little slow. Turn off a couple of these other things here. Okay, I think we're gonna come back in on the Russell. I'll take it short. Again, I want to see where want my data to catch up. Yeah, I think we're back up now. So sometimes you don't know if your data is running slow or fast unless you have other windows that you're watching and where you can rely on the data to be a little more consistent. Okay. Looks like we're still in our Dow trade. Price never came up to our stop loss. We just have two micros here. Okay. Did anybody take the Dow? Stay in it. S&P. Yep, I'm still in the trade. We gave back a little profits, but we don't have any real quick indication of the Apple and Nvidia, which are large market cap weighted stocks. They're still kind of mixed.
Order filled.
Okay. That stopped. Now we might be starting to make we still have a minute left in this candle to complete, and then another 5 minutes after that. So I do like to put the time remaining in the bar because it tells me it helps me manage expectations of how long I may need to wait. Okay. Let's do another one here. But are we experiencing that whipsaw in price action again? Yeah. We're also noticing the Dow dropping, S&P coming back up. If this fair value gap has already been touched, okay? Once it was touched, it's used, okay? So don't try to take it again at that same spot. Fresh touch on the Russell and a fresh touch on the NASDAQ. Let's come back over here to the NQ. Recognizing where I want to place my stop loss. And we're going to start off with some small contract size. We're seeing that the tick Q is on the bearish side. There's more selling going on.
Order filled.
And the stop loss is going to be up here, 861. I'm looking at that 265. Well, that's a little bigger risk than I really want to take. Okay. So I'm going to buy back one contract
Order filled.
and drop my risk. Oh, I did. Darn rookie. Okay, let's take that one contract here. Selling short.
Order filled.
And then placing my stop loss. Pretty. Okay. Now that is a pretty big move, isn't it? Okay. All right, let's check out crude oil. 66.41.
Order filled.
We're still in our Dow, but I did get stopped out of my NASDAQ. Crude oil, natural gas. Gold. Gold just hit a fair value gap, coming back up to a resistance level. All right, our exchange traded funds, let's across the board here. Still somewhat mixed. The Dow is still on the bearish side. Qs and the SPY got a nice little bounce here on the 30-minute chart, but they're really not at any major turning point. Okay, so we have to rely on the smaller time frames. We still have about 2 minutes left for a fair value gap to be completed on the S&P time-based chart, 5 minute. Notice the BKX, that's the bank index. 23 national and regional banks. And often you see that the BKX and the Russell are pretty highly correlated for those banks. And the bank index is dropping, okay? Now, the bank index, you don't want to fight the direction of the bank index. Follow the banks. Okay. So the banks have dropped, but the markets went up. So we're seeing a little discrepancy here. Okay. So we may see prices come back down to a demand. We'll see if there is real buyers at this 68.59. Okay. We still got about a minute for this chart to this candle to complete, and then we'll look for an entry. See how we're planning this ahead of time? Okay. So we have a fair value gap to the upside. Okay, S&P 868.59, 68.54. Okay. We're always going to use the low of candle number 1 of the fair value gap, 3 candle pattern, as our protective stop loss. Let's have some rules. Okay. You can modify the rules per your trade plan. Okay. Once the 3 candles have completed, okay, and I have that little gap between the first and the third candle, we still got 37 seconds. Okay. My entry price is going to be back at the 68.59 area. Okay. And my stop loss is going to be at 68.49. Now, I already know that I'm going to be taking 10 points risk. Do I want to take 10-point risk with 50 contracts? Do I want to take 10-point risk with 1 contract? Okay. How do you want to play it? Look at your trading plan and say, you know what, my max risk per trading idea is X. Okay. And based on that max risk, I can trade 1 contract, 10 contracts, 100 contracts, whatever that might be. Okay. So let's place this order. We're waiting now for price to come back down to 68.59 3/4. Place an order to buy 2 contracts if it comes back down to that price. And then we're looking at a stop loss at 68.50. Okay. If another fair value gap should be created, we'll take advantage of that as well. Okay. But we're still 5 minutes away from that one. NASDAQ. Okay, but the NASDAQ, this is going to be a good one here. Price is approaching a fair value gap. Okay. A supply area. We can see our stop loss. 24,936. We can see a trade entry about 24,902. We're looking at the stocks. Okay. Now just ask yourself right now, would you be willing to go long Amazon? Okay. Just looking at the charts, would you be willing to go long Meta? Or would you want to pull back? Or Broadcom? Or Microsoft? Google's on fire. Okay. But would you be a buyer? If you're saying, no, I wouldn't be a buyer, I'd wait for a pullback. Well, most people are going to be doing the same thing. Okay. And we all kind of learn from the same playbook. Buy low, sell high. So what I'm going to set this trade up with right now is if I take an entry at 24,902, my stop loss will need to be at 935. Okay. So we're going to start off with just 1 micro at that point. Ooh, coming in late. So,
Order filled.
okay.
Order filled.
And stop loss 936.
Order filled.
Something's not right with my computer here.
Order filled.
Sorry, my data is just a little wacky right now.
Order filled.
Okay, we do have some economic reports coming out here shortly. 9:45, we have PMI composite. And we have a Fed speaker. Okay. And we almost have created another fair value gap. So we'd be looking for some to be a buyer at 792 if the trend is going to continue, or the closest one is 844. Remember, size your position according to your trade plan. Was there any news that came? Trump, I'm considering limited strike on Iran. Ooh, that's what caused it. Limited strike. Now, that is just a lot of smoke and mirrors. But the markets are, it's causing a lot of volatility in the market. So what's that going to do to crude oil? That might be bullish on crude oil. But the professionals have last trade day today, which is going to override. Stop loss. Just have to observe this for a moment. Not quite sure how the market's going to take that. As we pointed out earlier this morning, that there is a lot of news out there that's causing some additional market volatility. The volume is still on the lighter side, and we're seeing that whipsaw price action. Man, the S&P came right up to there. Why wasn't I looking at the S&P? Having that stop in the right place on the Dow is keeping us out of that whipsaw. But the indexes are getting messy. Meaning they're going different directions.
Order filled.
Okay, just looking at that first target, about 24,844. We need the stocks to start backing off their highs. Once the stocks start moving lower, we'll see how the futures react to that. And we'll also see that the Qs are really not giving it up yet. It just kind of broke a little resistance area. Stocks move first, exchange traded fund second, futures third. We need a little follow through on the QQQs. But looking inside the QQQs, we could see that, you know, Meta is still moving higher. But we're starting to see a little back off from Broadcom, Nvidia, Tesla, Google, Microsoft. So as long as the stocks keep moving down, that'll bring the QQQs down. Remember, QQQs are a derivative of the stocks, the NASDAQ 100 stocks. So the stocks would move first and then the Qs would follow, okay? As long as the stocks are showing some red candles, that's what we're going to be looking for. Now you can change this to any time frame you like, depending on your trading style. If you like the 3 minute, 2 minute, 1 minute, okay, that's, or even higher time frame to see where things are turning. Okay. Now we need the Qs to come back down. Qs have a fair value gap around 603, so that's another dollar move down on the Qs. A lot of volatility though. Who do we need help from? We need help from Meta. Watch the time. We're approaching the time. Constantly monitoring the stocks when you're in a trade and also monitoring what you're doing, what the Qs are doing. You know, we're coming back down to where old resistance may become new support. We expect a little bit of a bounce around these areas. 78% of the time, the markets will bounce off of a fresh support or resistance. Okay. So we know there's a high probability the price bounces off of support and resistance. Okay. What we need to see is, are the stocks going to continue to drop back down to the origin of the move? Okay. We're looking at that first target about 24,844. Again, it just bounced off of the old resistance. Okay. Stocks are starting to gain some strength to the downside, going back down to look for buyers. Approaching the first target. I only took one contract, so if I get out, I get out. Okay, it may still keep going, but I'm also reaching that kind of feel good button, you know, take a profit. Stock's got a little uptick.
Order filled.
Now, in order to start a downtrend, we have to take out one fair value gap and then create another one to continue with that. S&P trying to reach. Okay, thank you for that. I'm kind of glued to this because I want to capture as much as I can on this trade. And we're approaching the 10 o'clock. Whoa, yeah, that's what I was afraid of. Okay, let's get
Order filled.
taking my profit. All right, let's go and look at the S&P. Oh, nice call. So, did you catch the long? I was getting a little greedy. Yeah, popped off. If you ever have to make a choice of which of the fair value gaps you want to utilize, okay, notice the S&P used the fair value gap, great entry, okay, and it just bounced off of the fair value gap on the long side. But when you're looking to decide if you're going to look for a change in trend, then use the fair value gaps that are at the more extreme levels, okay? Now you could tell with the light volume, you saw how fast the NASDAQ bounced against me. All right, crude oil. With all the, we got a Fed speaker, Bostic speaking right now. Trump came out at 6:37 or 9:37, considered a limited strike. Again, that's the wink, wink, nod, nod. You know, we know how the negotiations go. Okay, S&P manufacturing PMI. These are delayed or last month's numbers. Okay, 51 over 52. Okay, notice they have two of them. And that's telling you that they're trying to catch up on their reports. Okay, so gold pushing higher. Good old Bitcoin. I know it's getting ready to do something, but it's just doing it so stinking slow. All right, so this one has been used. We have a leg base on the other side of the dead space up here. That is a different type of entry. Okay. That's a leg base zone versus a fair value gap entry. If the uptrend is going to continue, then that 68.59, 68.60 area is where I would want to participate in that if I felt that this was going to make a bottom pattern. Okay. We're also seeing NVIDIA and Apple moving lower. It's probably given an NQ. Going to keep moving. Okay. Any questions from the live stream? Any questions from the Zoom session as well? Oh, interesting. Thanks for that. Callie just reporting, well, she reported a little bit ago. Margin rates increased on TradeStation. Okay, so when the brokers start to increase their margin rates, they know something's coming down the pipeline. Okay. And what they, because they're going to always protect themselves. So if you're noticing you're getting some signals with increased margin rates, I haven't seen it on the other brokerage accounts that I have yet. I did see some get taken off. Hey, Matt, on DIA, it just hit a very long trend line going back to Liberation Day for a bounce. Okay. I just come back up. It didn't quite hit my end of that. Yeah, it's also, look at that on the daily chart, it just tagged the 50-day moving average as well. a moving trend line as well. So as I was stating, when the brokerage or exchange increases margin rates, it means something is really causing them to feel nervous. Okay. The brokers are always going to protect, and the exchange are always going to protect themselves first. Okay. How is it that we're not getting a lot of protest on this? Kind of strange, you know? Hey, Ken, you mentioned not trading against the banks. Can you explain why? He who has the goal makes the rules. Okay. So the banks
Order filled.
can also show where they have inflows of monies. Okay. So if the banks are moving higher, and this is 23 different banks, okay, 23 or 24, national and regional banks. So if they're moving down or moving up, okay, we want to use that as an odds enhancer for a direction. Now you can also put your fair value gaps on there. You can put support and resistance. You can do your analysis on there to expect turning points. But over the longer, let's say, call it swing trading or short-term trading, the direction that the bank index moves is often where we see the markets follow. Okay. So treat it as an index, not a lead indicator. Okay. Now markets are getting a big move. Wait, not done yet. But you're seeing how the fair value gaps, once it's tested, generally it goes through it. Let's take a look at the cash value. We're watching the S&P. We're approaching a couple of the leg base group of candles in a sell territory. So this is where we mark our support, minimum 3 touches. We look for the price to find a leg base within the sell territory. Oh my gosh, what is going on? University of Michigan sentiment, the consumer sentiment was that delayed as well? No, it wasn't. So the sentiment is changing more to the bullish side. The light volume is still making prices rip. Now, I was talking with a buddy last night, and they were, he was expressing that there was a huge amount of put buying going on. And I said, like people were, Trump. Oh, that's major. That's not good. Global tariff struck down by the U.S. Supreme Court. Oof. What? I don't know why things are going up so fast. That's not good. It wasn't consumer, so. That is really not going to be good. But my data is running slow. Watch your own data. We're approaching some supply zones. Volatility is extreme. I'm gonna stop sharing for just a moment because my charts are frozen. I'll turn it back on in just a second. And that's, that with the light volume, somebody's expecting something, but boy, that was explosive. It's gonna come right back down. This is not a good sign for the market. And that really doesn't make sense on that ruling, though, in my opinion. Everybody else can impose tariffs, but we cannot. I guess we can switch it to an embargo. You think he's gonna get back those trillions of dollars? Another one coming out, Feds also see that, waiting till July to cut rates. Guess we need the aliens to come out to save the day. That's true. The Supreme Court doesn't control other countries. Wow. My charts were frozen, so that, they're moving, but they're not switching here. Let me try to stop sharing just another moment, see if we can get those things to catch up. Guess we needed the catalyst. The distraction was the good old Epstein files and alien release of documents of the aliens. Everybody was looking another direction. I don't know, I'm not seeing this as a very big positive for the markets. But I don't have a trade entry because you're seeing my screens are a little frozen at the moment. U.S. officials, U.S. military planning on Iran highly advanced with operations ranging from targeting individuals to pursuing regime change. There's a lot of smoke and mirrors going on out there right now. Which one do you want to play? I can't believe the data is just locked up. Yeah, I know, Callie. Wish I could be more expressive on here, but in a public forum, I just have to keep it kind of neutral. All right, let me stop sharing again. I just got to let these charts catch up. maybe TradeStation adjusting the margin rate was, because they knew their data was gonna lock up. I've not gone anywhere. I'm still here. I'm just letting the data catch up. Let me see if I can reload it real quick. Yeah, I can't see how the markets would take that positive. But there is just a bunch of whipsaw price action. Come on, church, load up. It's like all my other programs are working except for TradeStation. Sorry about the delay. Nothing I can do about it at the moment. I can talk about an upcoming class that we have coming, which is our pre-market routine. The things that I've shared with you in the, let's bring it back up. My charts are not there just yet, but still waiting to catch up. The items that we shared in the pre-market routine and the things we talked about as far as preparing for today. We do have a class coming up next week on all the little detail things that we match up. Now, some of the items apply more to indexes and some to agriculture, some to metals, and so on and so forth. Okay. So as we expand our pre-market routine, maybe later in this, we will create kind of a matrix to say, okay, if you're trading the equity indexes and that's what you're focused on, then we'll look at this, kind of look through and say, okay, I'm going to focus on collecting data. But I do a market analysis on all of the markets, whether it's metals, whether it's agriculture, whether it's indexes, FX markets, and crypto. Okay. And I give kind of a broad view of things. So the pre-market routine process, I'm going to be demonstrating that right now. There's an offer. We can put it out there in the live stream, and we can also put it in here for those that have not signed up. Okay. Companies hit on tariffs are happy, says Fox Business. Okay, thanks for that. Yeah, but that's a short-lived thing. Yeah, the monies that were there, yeah, that I know they have a backup for this in case of this ruling, but it's going to be kind of interesting to see that play come out. Okay, thank you. Yeah, it's pinned to our chat if you want to come into the pre-market routine course, which is coming up. Okay. Yeah, my data is severely delayed, so I'm gonna give this a couple more minutes to see if we can get. Okay, looks like we might be up going now and going now. So in Q. Let me just reset a couple of things. Markets are slowing down. Let's see what the stocks are doing over here. Get some of the other levels off. I just got to see how delayed my data is. Okay, so we got RTY. Things are starting to settle out. Just not sure where they're gonna go. Now you can see that the benefit of having a protective stop loss in these market conditions is really, really important. And always knowing what you're risking on a trade. Is when news comes out like that is, this administration does have the tendency to pop out the news at certain times. And I would fully expect some rebuttal on that to come out. The cat just was not leaving me alone. Let's go inside. Gonna have to wait. All right, let's get set up for this. Wow, huge whipsaw. Now, if you've had lines on your chart where you expected to take a trade or transition into a trade, okay, and they cross those lines, get them out of the way so you can see things more clearly. Thanks for posting that, Kevin. I'll have to go back and look at that after this session. That'll be something we can talk about if you guys want to discuss it a little bit more in the Mastering the Charts recap and review session. Look at that. Tick is showing a lot of selling. Internals. Yeah, I think the market doesn't know how to respond to this at the moment. But we do. We just look for our setups. Make sure we have protective stop loss in place. Whew. That is a swing and a half on gold. Exchange traded funds. Looks like they're now all starting to align. Let's get back over and look at all the futures together. They just came out with that's a good question, Robert. Traders, this came out about 12 minutes after the top of the hour. Traders move Fed cut rate bets. So they're betting on the rate cut they've moved it back to the June area. Okay, so that's, I don't know if that's what will happen, but we do have a Fed meeting, FOMC meeting coming up in a few weeks. It seems like we just had one, but they come around every 6 weeks. So looks like the expectations are moving it back further. Okay. All right. I'm just resetting up a couple of the charts and getting rid of some of the lines that price ran through. We're trying to figure out what the banks, institutions, and traders or big players are going to do. And for that, we need to find where those levels are. Because with all this whipsaw, light volume, we knew that the whipsaw was upon us. Okay, that's why we had to take small position size and just be patiently waiting there. We had enough evidence in the pre-market to be on the defensive side. We just didn't know that the news was going to be so spectacular. But let's get, okay, so we're reset up. Bessent is on it and has other ways. So is that going to send the market down or send the market back up? Exactly. All right, so all we can do is look for our setups at this point and make sure that we are managing our risk. Taking a look at the internals, it looks like the pressure is off, the fear gauge has dropped. Okay, but the trend with calculates the upticks over downticks, up volume over down volume, okay, is back into a neutral area. We're also seeing a tick and a tick Q. So if you're confused and saying, hey, I don't have a trade right now, you're right. But looking at the internals, you can see that everyone else is also wondering how to position for this. Should they be bearish? Should they be bullish? Okay. So when news or events like this come out and cause big reactions, we need to see what the stocks are doing. Okay. So main stocks to watch for would be the large market cap weighted stocks like Apple, Broadcom, Nvidia, Meta, Tesla, Amazon, Google, and Microsoft. So why watch those? Those are the large market cap stocks, and they move the indexes more than the small market cap stocks. Okay. And you're also looking at the price chart. This is a tick chart, and you're seeing that it doesn't have time, but so you got the clarity of what is going on. They're going back and forth. Okay. I think the markets right now are just running stops and people's speculation. Okay. But as we start to look at the stocks over here, just understanding where and what they're looking like, are they all getting upticks? Well, then the index is going to move higher and the Qs will move higher. If they're all getting downticks, okay. So yeah, this is quite the mess. So we may have to look at something other than equity indexes until we get up to some extremes. So let's look at some of those extreme areas for speculating here. S&P getting back above the 50 moving average would be bullish. Okay, 50 moving average is about 33. Okay, that's a daily 50 moving average. We have prep screen zones up above. And if you follow what Richard Wyckoff teachings, you'll see that we have been in an accumulation for a couple of days, just going back and forth. And accumulation leads to that manipulation, whether they're going to manipulate price down or up for the bigger price move. That's what we're waiting to see. At current glance, we're at the top of that resistance area. And it looks like they may try to manipulate price to the upside. So on the S&P, we have 69.51, 69.60 if price starts breaking out to the upside. Okay. We see the price broke the prior session's high and ran right into a speed bump area. Okay. So we don't, on a little slight higher time frame, we're still seeing that there's confusion until we get up to some higher levels where we have prep screen zone and where we have fair value gap. Okay. Now, the map of this, let's just bring that up just so we can kind of see the picture. And these have been really important to understand that map. I just want to bring the picture up here. Where we have the accumulation, if price manipulates to the downside, look for the leg base zone, and then look for distribution back to the upside. What we're currently looking at now is just the accumulation. So we know manipulation is coming. Manipulation phase is where they run price up, thinking everything is good, and then the distribution is back down. So remember, watching how they set up these charts and who's setting them up? Well, banks and institutions. It's a lot like playing a sport. You know, sometimes when you're running and your opponent's running at you, you fake left and you go right. Okay. And that's what these big banks and institutions do to traders a lot. The accumulation phase is just a sideways choppy market. Manipulation is just that. They're manipulating price lower to chase everybody out, and then they reverse it. Okay. So what we're looking at now is we're still in the accumulation. What's to be determined? Are we breaking to the upside for manipulation, or are we going to break to the downside for manipulation? Okay. It's all the same patterns. The same patterns tend to work on multiple time frames, so it's a picture that traders are looking at. Okay. We all look at pictures. We all look at the charts and try to determine which direction they're going to move based on the picture on the price chart. So those patterns are very much ingrained. NASDAQ is still between the 50 and the 200 moving average. Didn't move us up or down out of that. I mean, it still looks like the markets are confused basically on a time-based chart, just with the whipsaw up back and forth. NASDAQ does have a fair value gap, 25,140. 166, and we got a prep screen zone up there about 25,355, 35,417. Okay. Now all the prep screen zones have been updated and are listed in our prep screen. Okay. Our daily overview. So mark those levels, especially now that price is starting to move out of this range. We need to see where potential sellers are at. As we look at the daily chart on the Qs also between the 50 and the 200 moving average. This is not an easy environment. If it's at an extreme low, we look for longs. If it's extreme high, we look for shorts. Okay. But right now we're in between, and even though the candles are big, so is the risk. Okay. All right, let's come back over to Dow. The Dow has all-time high. We do have a couple little fair value gap areas, and I will say we have that leg base. So we have some areas that are a little closer for potential turn back to the downside, sellers. And we see where the buyers are located. Now, once we identify the levels we anticipate where buyers and sellers are at, okay, in order to participate in a trade, we would need to see a new setup, okay? It's one of the toughest parts right now is waiting for that next setup, okay? This is messy. It's not easy to trade and it is very emotional. Okay. As you could tell, a lot of us had some emotions when the market started moving. Okay. Almost got lucky because my data froze up. I would have been jumping in too. Let's see what happened with the dollar. Okay, now one of the things we explained when we started this session is when the dollar is not correlated with the 10 and the 2-year yields, this is a challenge. Okay, it's a difficult market condition to participate in. Okay. Now, looking at the dollar index, it's dropping down, found a little support, but then the 10-year yield found a little resistance. And the two, not sure what the heck to do. Okay. When the US dollar 10 and the 2-year yield are not correlated, this alerts us to market conditions that are extremely difficult to participate in. Even though the volatility index is going lower, saying, oh, the fear is subsiding. Okay. And we see the trend is back in the neutral area. Okay. Not a lot of people put the correlation between the dollar, the 10 and the 2-year yield together to understand conditions of when you're trading. Okay. So in that, I wanted to dollar dropping. We see that the FX market shooting up. We saw Swiss franc came right into a supply area. Aussie dollar a little bit higher up. And Japanese yen still has a ways to go. Okay. And that leads us over to the 5, 10, 30-year bonds and notes and their volatility based off of the US dollar's move. Okay. Yeah, anytime price goes through your levels, just take them off and you redraw them. You need new information. All right. Well, it's going to be a little challenge for the rest of the session here. But if you want to join us in the Mastering the Charts recap and review, I don't know, team, can we post a link where if anybody wants to come and hang out with us for that session, it's in about an hour. Can we post that out there? I won't do a live stream on it because it's one of our paid sessions, but if we have people in the live stream that want to attend the Mastering the Charts recap and review, we could certainly invite them. Oh, okay. Have them email us. So what email would you like them to use? Can you type it in the chat for them? Just send a quick little email. Yeah, I'd like to attend Mastering the Charts, recap and review. And we'll continue our trading session and a little review of what we've done in our last live trading room sessions. Okay. And that's about an hour long. We'll start it about an hour after we stop here. So just give us a quick little email. And I think it's admin@themarketinstitution.com if you'd like to join us in that session. Okay. And maybe the markets have quieted down. We'll have some more trading opportunities there. Thank you, team, for being responsive on that. I know I kind of throw some curveballs at the last minute. So I will see everybody in about an hour. I'm going to take a quick little break, let the market settle down, and then we'll go back to doing some trading and review of our past sessions and what we were looking at as far as utilizing our pre-market routine information there. Okay, so everybody have a great session, and we'll see you in about an hour. If you'd like to attend, please send us a quick little email, and we'll get that link to you right away. Have a great day. Happy Friday, everybody. Trade safe.